If you're in a policy and you're noticing the rates are starting to climb up, it's not uncommon. That's actually happening across the US altogether. Well, what I want to dive into is show you how to do a renewal with your current insurance and some tips that you can use that might get you some discounts or things that you may think of that actually might get you a better deal going forward. Obviously, the first reason that any article you're ever going to see or read is to shop around. If you don't currently work with an agent, like an independent agent, that's usually the mistake that most people are making. Yes, are the State Farms and the Allstates and the main staple companies out there and competitive? In some states, it's becoming very few and far between because they're trying to make profit, so their rates are skyrocketing right now. They've been able to hold back and not increase the rates, but that's caused it to be larger of an impact now that the economy and the cost of used cars and all of the materials and the delay of parts, all of those pieces added up have created kind of a little bit of an explosion out of their company. They have to go back into profit, so they're going up 30, 40, or even 50% on your current policy. Shopping with an independent agent allows you to get a little bit more localized because most independent agents work specifically with multiple companies. Sometimes those multiple companies are just the local guy that you may not have heard of that does have a really good rating, and we'll show you how to check those, but it has a good rating on the company that might just be a good fit for your scenario. The second way is to review and make any adjustments on your policy. I'll actually link a video at the end here that goes over how to do that, but essentially knowing what coverages you have, maybe you're overinsured or sometimes you're underinsured and need to up a couple different coverages to make sure it's a good fit. You'd actually be surprised on the liability limits. If you raise them in some scenarios, it makes it less expensive. Think of it this way. Insurance has profiles, and they like different types of profiles. The top companies or the really clean, neat, or what you think is expensive as a kid, but your parents have it for some reason, it's because they wanted your parents insured. They didn't want the younger drivers. They wanted that clean risk, so to speak. So having the right credit and insurance and the home ownership and the location and all of that, they've geared their prices to fit that perfectly. Their price is going to be less expensive than yours. And because of that reason, they're a good fit. Now, you may be in one of these buckets, and what happens is sometimes changing the limits that you have puts you in a different bucket. It's actually better to be the best person in a lower bucket to be the bottom person in a really good bucket. Hopefully that makes sense. Bundling your home and auto, if you have that, or renters and auto, can make an impact. If you're paying more than $200 a month for your car insurance, then likely adding any type of policy will probably make it less expensive. Sounds weird, right? Mark, what are you talking about? Well, there's about a 20 to 25% discount if you add home or auto. So if your house is insured somewhere else where you don't have renter's insurance, it's a good thing to have. I mean, you should have it just to have it because there's a lot of stuff that it unpacks. But having that coverage, knocking off $40 or $50 off your bill, but only paying $25 for the actual renter's policy makes sense. You actually save yourself an extra $15 to have more coverage. The fourth piece is maintaining a good driving record. I'm not going to go too far into that. I think we understand you drive good, they do well. If you're in that sweet spot between that 35 and 55 range, that's really the sweet spot of insurance companies. A lot of them will give you a safe driving discount. Sometimes you have to join a new company. That's why we shop, right? Every 5 years they may look around, and it's because they're giving you that discount as you join them. A lot of the times those discounts aren't temporary. They stay on your policy for as long as you keep them. Yes, increasing your deductible could be an option, but once again, you've got to think back. What is my scenario? What can I afford? What is the right fit? So if you go from a $500 deductible where if you crash your car and you've got to out-pocket $500, yes, going to a $1,000 deductible will be less expensive, but can you pay that $1,000 out of pocket at the whim of a hat? If you don't have that saved up or it's not affordable or if you have a credit card you could use, then it might not be a good reason to increase that deductible. If it's affordable and you're okay with that, and it's hard to say, well, you can't predict that you're in a good area or you're a good driver and all of that because the people around you matters. But if that's a scenario or risk that you're willing to take, it may actually be a good thing to have a little bit higher deductible so that you're not paying as much on your monthly premium. A lot of people ask, when should I remove the full coverage piece? And honestly, the way I calculate it is every 3 years. So if the value of your car, that comprehensive and that collision coverage cost, for 3 years added up, if it's worth more than what your car is worth, I don't carry it. Once again, if you can't afford to replace the car, then it's just kind of a no-brainer. You really just should carry it. These 6 pieces to check for discounts. There's a lot of discounts you might have got when you shopped around, but they could have changed. So sometimes there's an affiliate discount, there's having multiple car discount, there's having a safe driver discount, there's a 5-year discount. I think Progressive even offers a loyalty discount. All these companies offers these different discounts that you get over time, and sometimes you've got to request them. So talking with your agent not always gets you the best discount, but at least kind of raises the concern like, hey, maybe we should take a look at this. Maybe we should revamp and review that. That's one of the reasons having those local agents or having those independent agents, they're really hyper-focused on those pieces. How you pay matters. If you pay in full, the 7th reason is to pay the whole policy. A lot of times it'll give you $100, $150. I've seen almost $600, $700 off a policy. Granted, they were paying a lot, but I've seen $700 come off a policy just because they paid the whole year. Paying 6 months or a year in advance usually gives you that additional discount that you're looking for. The 8th is the most controversial piece, and it's actually the best one, but it's the one people hate or love. It just depends on who you are. I think my favorite comment so far on this channel is, I'll share my data for a burger. So if you share your data or you do what's called usage-based insurance, it's essentially a way for an insurance company to track you for a certain period of time. I personally don't like doing it with companies that don't have a time limit. So some of them will say every 200 and blah blah days of a year we'll track you. I don't like that. I want it to be once and done. So a lot of these companies will go 90 days and say, if you drive good, you brake good, you accelerate good, you're not driving, after midnight, between 5 a.m. and all of these scenarios that we've talked about in previous videos, then we're going to give you 8, 15, even 20, 30% off of that policy because we know that you're only driving in these locations and we know that you're a good driver because we're tracking it. 90 days is over, shut it off, delete the app, we no longer track you, and we're good. So if you are that type of person that's willing to do that, that can give you anywhere from that 5 to 10 to 30% off. Just be careful because some companies, talk to your agent, will reverse it. So if you do bad, very few, but some companies will charge you more because you're a higher risk. So just know which company has those options if it fits what you're looking for. Now we're only partway through some of the new discounts that 2023 and 2024 are going to have, but I just wanted to let you know that if you are kind of shopping and you're looking for this advice and you're like, this is a lot of information, why do I have to remember all this? Because you are honestly the only one that's going to get these pieces. Is working with the right agent, like I said, matters. I'll put in a link in the description below if you are shopping for car insurance. There's a ton of different agencies that I've worked with, and I even have a local agency that you guys can work with as well, where we do these things for you. We talk about the discounts and the coverages and make sure you are a fit for the company that's the best price for you. Also, do you have the right coverage? Do you have the right discounts? Things like that. Having somebody that can actually work that through with you is very powerful. So if you are interested, I'll put the link in the description below where you can fill out the information. Otherwise, the 9th piece to look at when you're renewing a policy is how many miles am I driving? Has things changed? I know you don't have to necessarily track all your miles, but if you think about it, if you're only driving 6 or 5 or even less than 7,000 miles a year, there's a good chance that you need to do either a mileage program or you need to do some sort of tracking that allows them to show that you're less mileage driven. Not all companies do this, most of them do, but there are some select companies that are even doing mileage programs to where if you say, I drive 4,000 miles, they track it for 90 days and they show that it's true, then you're not even going to pay nearly as much as you would as if you were driving 10 to 12 to 15,000 miles, which is the average. I kind of lost count of the number. I don't know if I'm 12 or 10 or 9 or we'll say 9. Number 9 is not really something you really control a lot. It does matter. So having the right credit makes a difference. And it's not like the sweet spot. It's just the better the credit you have, the better it is. Technically, in most to almost every state, they don't call it credit. There's what's called an insurance score. I'll actually link a video here if you want to learn more about how an insurance score affects your actual credit versus your insurance. Easiest way to think of it, if you have good credit, you're going to get a better deal. The 13th one is having that loyalty discount. There's not much you have to do with this one. Most companies just add it for you. The longer you're with a company, the better. If you've been with them for 3 years, you'll usually get a discount. If you've been with them for 5 years, you'll usually get a better discount. And then it really stops. Most companies that I know don't go past that 5-year mark. That's actually a really good thing to do if you're shopping, because if you're not with a company that gives a loyalty discount, being with a specific company for 5 years or more or 3 years or more will give you a discount with the ones that track loyalty, because they'll credit that loyalty that you've had for them because they just assume that you're going to do the same thing with them. 14th piece is look for professional accommodations or affirmations or whatever you want to say. Look for connections. They're called memberships. If you're a credit union member, if you're a Harley Davidson member, if you're a car club or anything, it doesn't always fit, but in most cases, government members, teachers associations, it used to be that only specific companies were giving discounts for that, and those companies used to be amazing. They were great. Problem is, they've lost a lot of interest in those discounts because the risk just kind of piled on. Well, most companies will give you a discount just like you would with those specialty companies. So if you do have a 4-year college degree, or you do have a master's degree, or you're a teacher, or you're an engineer, CPAs get big discounts. Those are professions that have a lower risk. Some of the ones that people do and they think it's huge is not really a big thing. If you're a student and you're under the age of 25 and you get good grades, that'll give you a little bit of a discount. If you're a young driver and you've taken a driver safety course, that'll give you a little bit of a discount. If you're an older driver and you take a defensive driving course in some states, not all states offer it, but that'll give you a little bit of a discount. Those are things I personally wouldn't go after to get the discount because usually it's like a 2% if you're lucky. So having those are great if you've got them, but not worth necessarily pursuing to get them. The whatever number we're on is to check your policy. If you look at what's called the declarations page, that'll be what declares everything. So the cars that you have insured, who's driving the vehicles, what your discounts are, what your cost and your coverages are, all of that's on those pages. It's usually 1 to 3 pages. And in there, it'll list the drivers. So if somebody's moved out of your home, or if somebody was listed as a possible driver that possibly lived in your home, some companies add them to your policy. That's part of their guidelines. They're allowed to do so unless you dispute it. If there are additional drivers that shouldn't be on there, that's one piece that might knock off hundreds of dollars just because you didn't need to have them on the policy. There are actually a handful of other discounts. I'm sure by now you've written some of them down. Hopefully I didn't overbore you with all of just the data and the facts. If you want to get a little bit further into some of the other discounts, I'll list a discount video that I've done previously that most of them are on that as well. If you're new to insurance and you're trying to figure out what those coverages that you need are and what to review, I'll put my Car Insurance 101 there that will go over the actual coverages. Hopefully this was helpful. Let me know in the comments below if I missed anything you've recently found that has changed on your policy. I'm Mark with Think Insurance. I'll see you soon.